Hi, my name is Angela Jump, and my Gatekeeper project is on auditors and the auditing function. When people hear that their project has been selected for audit, they generally cringe and dread it. Auditors are generally labeled as a necessary evil. The purpose of this presentation is to describe what an auditor is, their role, discuss how they are paid, their current performance, and dilemmas they face. Although auditors are sometimes the most unpopular person at the office, audits are very beneficial, and if done ethically, can help protect the company. Definition of an auditor. An auditor is an independent, certified public accountant who examines the financial statements that a company's management has prepared. The Gatekeeper auditor has two potential objectives. One, to protect the investor's economic interests, and two, to prevent misconduct by the manager. External auditors are independent accounting auditing firms that are hired by the publicly held companies that file reports with the SEC. They review and submit financial statements that are accurate, truthful, and complete, and prepared according to a set of general accounting standards, GAAP. Internal auditors are those who are employed by the company they audit. They primarily provide audits related to the effectiveness of the company's internal controls over financial reporting. Role of the auditor. External auditors play a critical role in validating a company's finances. External auditors are not there to fix the problems, although many will provide recommendations. External auditors are charged with obtaining a thorough understanding of your work environment, operations, and internal controls. They'll then compare your business to others in the industry to identify any irregularities that could stem from incorrect financial reporting. With globalization and as many companies are expanding, they're more at risk for regulatory and compliance risks. So the internal audit function is a good tool to use. Internal auditors are going to focus on fraud risk, root cause analysis, control improvement recommendations, monitoring of reporting whistleblower hotline, and providing ethical training for employees. How auditors earn revenue and issues this presents. Auditors are hired by the very companies they audit. Ask any auditor who they consider their client, and a good bet is that they will always say it's the company. This is the elephant in the room, and will remain so as long as management negotiates and pays the audit fee. So this is the dilemma of the independent auditor, is having to answer to two masters with conflicting interests. So the law provides that corporations hire their own auditors, which creates an auditor-client relationship. So, say the auditor provides a negative audit, the audit firm then has a potential to lose that client and any fees that would be obtained. There needs to be new policies to reduce an auditor's interest and whether a client is pleased by the results of an audit. But the fundamental problem still remains. Because the auditors are hired and fired by the companies they audit, they are in the position of possibly casting negative judgment on those who hired them and who can cut them loose. So what's needed is education that helps auditors understand the unconscious errors they make with human nature and the reasons they make them. Although this knowledge won't solve the problem, but once members of the auditing professional understand the role of bias in their work, honest and visionary leaders in the profession can help change the conduct of accounting to prevent the conflicts of interest and bias. Auditors' performance as gatekeeper. Where were the accountants? This is a question that you heard when anyone talks about Enron, WorldCom, or any dishonest companies in the media for a scandal. But lawyers and analysts say that for the most part, Sarbanes-Oxley is working. So what this act did is that it created a new auditor watchdog, the Public Company Accounting Oversight Board. One of its toughest provisions required corporate executives to certify the accuracy of financial statements, and impose jail terms of up to 20 years for willful violations. It strengthened auditing and made the accounting industry a better gatekeeper of financial standards, and has fended off Enron-sized disasters. And in the past 11 years, there hasn't been an accounting scandal even close to the magnitude of Enron or WorldCom. Current issues and dilemmas. So as previously stated, the client pays business model is the auditor's biggest dilemma. Auditors have a strong business reason to remain in good clients' good graces and are highly motivated to approve their clients' accounts. Under the current systems, again, auditors are hired and fired by the companies they audit, and it is well known that client companies fire accounting firms that deliver unfavorable audits. So with other industries, accounting firms, they want to sell additional services as well, so they want to maintain these good relationships with the clients. But that trickles down to favorability and bias. Just human nature. You're more likely to give an honest opinion to a stranger rather than to your friend. You might tell them a white lie that, the dress looks good on them. You're especially not going to tell your high-paying client that his shirt doesn't look good on him. So as, an accounting auditing firm remains with the client, relationships grow, personal ties deepen, biases grow stronger, and then with this tension, auditors then just unconsciously lean towards the favorable side of the client. So with this, the only solution to this is really to remind auditors of the ethics that they signed up for, and that they are serving the public, and that although the client is paying for them, they should not be serving them in that mode. Conclusion. An audit will ensure accountability, provide reliability, assurance, provides a complete report on the current shape of a business, and is an opportunity to get feedback. Audits are a useful tool. So what I've learned is that, you want your company to be audited. As a high-level executive, you want to get a report of your entire company. You want to see the gaps. You want to know potential risks, and you want to get feedback of how you can correct that as soon as possible. So the next time you're under audit, it might not be, it might be stressful. You might have to answer tough questions, but at the end of the day, audits are a useful tool. So a good quote I found to end my presentation was, "Don't ever let your business get ahead of the financial side of your business. Accounting, accounting, accounting. Know your numbers." Thank you.